Hello and welcome to this month's View from the Lighthouse. I am David Hansford, Executive Director and CIO at Long Beach Capital. This month we are discussing the Iran War Framework, Peace Agreement, SpaceX IPO, and how Nubank, a portfolio company, is using AI. First up, oil prices and the Iran war. Trump announced that the US and Iran had reached a framework agreement on the terms for a peace deal, which he then signed at Versailles on Wednesday, 17th June. Trump's deal offers Iran significant concessions through lifting of oil sanctions to ensure the near-term reopening of the Strait of Hormuz, while the broader terms of the deal offer little to suggest Trump has gained anything from the US's war on Iran and 4 months of conflict. The terms of the deal are similar to the Joint Comprehensive Plan of Action, which was agreed under Obama, and limited Iran's nuclear program in exchange for sanctions relief. The oil price, Brent crude, has declined to around $77 per barrel after the announcement of a framework for a peace deal with Iran. This is down from a conflict high of around $118 per barrel. Prior to the start of the conflict, oil traded in the mid-60s per barrel. As we have put forward in previous editions of View from the Lighthouse, we expect oil prices to continue to decline to pre-conflict levels, or even lower. The proposed deal framework gives Iran greater access to oil markets. The UAE has left and possibly permanently damaged OPEC, and all oil-producing countries in the region require maximum revenue from oil production to rebuild or support their economies. At the same time, China's electrification continues apace, and many other countries and global consumers will be considering their vulnerability to future oil price shocks. In short, oil supply is likely to increase, and demand substitution will continue. It's also likely the inflation impact of the Iran war oil price shock will be temporary as oil prices return to pre-war levels. Moving on to SpaceX's IPO, SpaceX recently listed in the largest IPO ever with an initial valuation on listing of $1.77 trillion, which has since increased to a valuation of around $2.66 trillion. SpaceX generated $18.7 billion of revenue for 2025. And is projected to have a revenue run rate of $55 billion, following large data center computing leases to Google and Anthropic. To suggest SpaceX's valuation defies gravity on any conventional financial valuation metrics is an understatement. SpaceX's corporate governance is poor, with full control vested in a single individual who is likely to reinvest every cent of SpaceX's future cash flows on interplanetary dreams. While there is much to be admired in the technical and engineering achievements of SpaceX, including reusable low-cost rocket launches and Starlink, an exceptional business with few competitors, SpaceX's current valuation is a moonshoot, or rather Marsshoot, based on out-of-this-world growth assumptions, with limited upside for new investors, and we are happy to observe for now. Previously, high-growth companies came to public market through an IPO much sooner, which allowed public market investors to benefit from their growth. For example, Google listed at a valuation of $23 billion in 2004 and has a current valuation of $4.53 trillion on revenues of $403 billion in 2025. With the abundance of capital which now exists in private markets, companies have not needed to access public markets, and the late-stage IPO of SpaceX and anticipated IPOs of Anthropic and OpenAI at trillion-dollar valuations leave substantially less opportunity for new public market investors. Next up, we are seeing opportunities in consumer-facing companies. Globally, consumer discretionary, consumer-related technology, and consumer financial companies have sold off on high oil prices and related inflation and interest rate fears due to the Iran war. This offers investors a notable opportunity as oil prices and factors related to the Iran war recede. Long Beach's portfolio companies are aggressively integrating AI into their business operations to take advantage of their large proprietary data sets and extensive customer relationships to increase revenue growth rates, reduce costs, and improve margins. This month's AI highlight, portfolio company Nubank. Nubank is one of the largest digital financial services platforms in the world, serving 135 million customers across Brazil, Mexico, and Colombia. Nubank has recently been issued a US banking license and is preparing to expand into the US market. Nubank has been leading an industry transformation by leveraging data and proprietary technology to develop innovative products and services, data-driven underwriting, a scalable business model, and low cost to serve, which combine to enable rapid customer acquisition and engagement at scale. Nubank is currently undergoing an AI transformation that involves rebuilding its entire banking operation around artificial intelligence rather than simply adding AI to existing processes. How Nubank uses AI for internal assistance in engineering. Nubank has achieved nearly 100% utilization of AI tools among its employees across all functions. This internal focus on AI has led to significant operational gains. Engineering throughput is up over 50% year over year, testing cycles are 90% faster, and weekly AI token consumption has increased nearly 10 times since the start of the year. These gains have strengthened Nubank's low-cost operating platform and contributed to greater levels of efficiency within the business. Approximately one-third of Nubank's structural efficiency gains are AI-driven, specifically through improvements in operations and collections. This has contributed to a record low efficiency ratio of 17.6% in Q1 2026. Looking at Nubank's use of AI for new products, including the AI Private Banker, Nubank has launched functionalities for a digital private banker that provides tailored financial services directly to customers. AI Private Banker functionalities are currently serving more than 15 million monthly active users. The service is designed to provide personalized financial management directly through the Nubank app. Key functionalities include financial insights, providing customers with tailored information about their spending and financial health, payments, assisting with and automating payment processes, credit advice, offering guidance on how customers can best manage and utilize credit, debt resolution, helping customers manage and resolve outstanding debts through the platform. Nubank's AI Private Banker functionality helps to deepen customer engagement and provide financial inclusion to customers without previous access to these services. How Nubank uses AI for Newformer, their proprietary foundation models for credit. Nubank uses Newformer, a proprietary set of foundation models for real-time credit decisioning and underwriting. Newformer models are in production for credit cards in Brazil and Mexico, and unsecured lending in Brazil. The models enable real-time valuation that prices and approves every personal loan request individually in under a second. Newformer AI credit models have been a meaningful driver of credit portfolio expansion, which grew 40% year over year FX neutral in Q1 2026 to $37.2 billion, allowing the company to increase credit limits with resilience and pricing accuracy rather than only speed. With a modern technology stack, deep AI integration, large data sets, and large customer base, Nubank is exceptionally well positioned to create long-term structural business advantage through the use of AI. In conclusion, we see opportunities in consumer discretionary, consumer-related technology, and consumer financial sectors. Consumer discretionary, consumer-related technology, and consumer financial shares currently offer attractive valuations, strong earnings growth, and attractive long-term prospects. We expect these areas of the market to benefit from lower oil prices and receding inflation fears. The Long Beach funds are invested in innovative, well-managed growth businesses, which are aggressively exploiting AI and have substantial data advantages and extensive customer relationships. We are encouraged for the future potential returns from our holdings in the Long Beach portfolios. Thank you for listening, and see you again next month for another view from the Lighthouse.